Zoom out here on my 4 hour chart because some things are going to move, like this stuff up here, because I'm zooming out and not saving it at the larger, or I should say, longer term chart. We got the peak in January. We dropped below the 50 and then we got rejection at it. Here we dropped below the 200 period and we got rejection at the 200 period here and we got rejection at the 200 here as the 50 crossed below it. Did we see something? And again, we lost the cloud. We held below the cloud. And again, do we see something like that? Do we see just a more feeble rally into the moving averages, into the 200 and the 50? Maybe as they get a bearish cross or just slightly above them like we had right over here. So just something we're paying attention to. But the cloud is likely going to act as resistance here. And the cloud I'm showing you in this video in the daily time frame, the momentum cloud. So, well, I warned you that we would likely get a rally off the 50-day moving average, and we are. We're up about 1%. It could just be a very feeble rally into these moving averages right here into the 250 as they get a death cross moving back towards the cloud of resistance. The divergences have given us an 8.20% sell-off, and right now we're attempting a bounce off the 50-day moving average in the daily time frame. Rally will fail. Pring parameters moved into the negative region, having formed a bearish divergence. So again, this is the calm before the storm. Please support the channel. Please support the channel with the link directly below. If you like my charts, then you will. And if you like my indicators, then you will, because they're right. Then please consider supporting the channel. Follow the link below to take you to a secured site, and you can donate any amount you want. If you could take a moment to help out, I would really appreciate that. I don't have any sponsors, just a direct relationship with you. Most YouTube channels get sponsors. That's how the channels make their money. I choose not to do that. The exchanges would pay me a lot of money to send you there. But they like to get the newbies all leveraged up that don't know what they're doing, all leveraged up to wipe them out. There's a lot of shady things going on. And then, how do I know they're not going to be the next exchange that goes under? I don't. So I just ask that you support the channel. So please follow the link below. And anything helps, just follow the link below and support the channel today. Let me know you want this amazing information. This is the information that I use to make my decisions about Bitcoin. And if that has helped educate you, then please support the channel. You could take a moment to step up to the plate and help out. I'd appreciate that. This is the daily chart. We're getting a rally into the 200 period moving average and getting rejection there. This is exactly what happened back over here in the daily time frame. Look at what happened over here. You got pring parameter going negative. You had a 52% drop. You rallied back up into the 200. Pring parameter went up towards the center line and rolled over, and the bottom fell out of Bitcoin. Here we've had the same thing. We've had a 52% drop. I called the top, predicted a 52% drop, 50 to 50%, 52% drop, a minimum objective target to 60 to 63,000. We hit it, 60,000. Got a bunch of the moon boys that laughed at me for predicting that, mocked that very idea of that. Now they're telling us how old the bottom. These are the people that never saw 60,000 coming. They never saw the crash coming. They told us we had a breakout at the top and we were going to 200, 250,000. When I told you we were going down to 60 to 63,000, and then I told you we get a bounce and then a bigger sell-off. But this bear market rally has been weaker than this one, so I've talked about the 4 different possibilities. Maybe the bear market rally is not done. If we can get above the 200 period, see all my signals turn back to bullish, I think that's less likely. Or we get a higher low than see it happen, maybe. Or a lower low, maybe it happens, and we bounce off the 200 and 300 week moving average, deceive the moon boys, we get a bigger bear market rally, and then another big drop possible. That we get, again, a new thesis is that maybe we get the continuation here, and we get the big sell-off right here, right now, and we see another move like this where we drop 68%, and maybe we drop down 80 to 90% from the top. If we drop down 68%, again, you're moving towards 25,000, which is an 80% drop from the top, which is what has happened in the past. But I expect pring parameter is going to roll over here, and we're going to get rejection at the 200. And if we do, then the risk is that pring parameter moves into a new low, moves down to a new low, or could form a divergence for either a bottom or a bottom down here, wherever that bottom's out at, or to be followed by a larger bear market rally. So those are the scenarios. I don't know the future. You don't know the future. I'm just telling you the 4 possibilities. Oh, you're leaving out the bull market scenario. We're in a confirmed bear market in the daily, the weekly, and the monthly time frame. There is no bull market scenario until we see evidence of a bottom. I think you will either bottom with the 4-year cycle or on into maybe the summer of 2027, maybe a year from now, on into the summer of 2027, just over a year from now. If we get a prolonged bear market, that would mean the 4-year cycle will break, but right now the 4-year cycle is intact. I'm just telling you, the pull up here towards the center line here with pring parameter is doing exactly what it did before. The weekly chart is doing the same thing there with the RS. Now we're seeing the same thing here with momentum. Again, it's pulled right up into the center line and turning down off of it as we turn off the 200, exactly what we did over here. During the uptrend, we found support just under the 200, and the death cross took place and marked a bottom in the bull phase. Now we've seen a change of behavior. We've seen the death cross. We've dropped sharply below the 200, and we've seen the death cross of the 50s remaining below the 200 period, although it's pushing back up to it just as we head back over here. You're likely going to see a sharp push down that will curl the MACD or curl the 50 period moving average back over. In all likelihood, it's probably not going to get a bullish cross. If it did, it would likely quickly fail and mark a top, just as these marked bottoms. The crossovers marked the bottoms. If we did get a crossover, it could mark a top, but good chance you're getting rejection at the 200 period moving average here. So again, last bear market, momentum turned negative, remained negative through the bear market, turned back into the positive region. Momentum was positive through the bull market and firming up at the center line as we pulled back, and the bottoms were at the just under the 200 and right at Bitcoin's average price, by the way, and the 50-week moving average, as I've talked about. But same thing here. Again, we're in the negative region. The last January peak was marked by a pull up towards the center line, and here we've had the same thing happen. This is telling me you got a good chance that the sell-off is going to resume here with rejection off the 200 period moving average. I told you that we were going to drop down below the 50-week moving average and bottom out around the 100 and bounce. We did do that. I told you before the bounce ever happened that we were going to have it take place. I told you we're still going down to my minimum objective target of 60 to 63,000, which we did. And I told you there on February 5th and 6th, when we reached the bottom on February 6th, I told you we're going to bottom on February 5th or 6th. And we're going to bounce and rally back up to 74 to 80,000. We've gone a little bit higher to 82,000. But I told you once that move is done, which it's now likely done, we're going to come down to the 200 and 300 week moving average. And I've warned you, the 200 is the black line, the 300 week moving average. I told you the moon boys are going to begin to proclaim this is where the bottom is going to be for Bitcoin. I warned you about this. Are the same people that told us we had a breakout at the top. These are the same people through the entire 52% decline that have told us that everything's a bottom. They're telling us 60,000 is a bottom. Now some of them starting to sell off are saying, well, the 200 and 300 week moving average are directly below where we're going to bottom. If we don't bottom at 60,000, they told us 80,000 was the bottom. The bounce off the 100 period, the pink line there. Again, I told you we were going to get the rally, but I told you it's not the bottom. And the lows before that, 99,000, 103,000, 105,000, and then the fake phony breakout. Now, why did I warn you, and it's now happening, why did I warn you that they would say the 200 and 300 week moving average is the bottom once we drop down to new lows, or as we see this rally begin to fail, which is now happening. It's now starting to happen. More and more of them will jump on the bandwagon and proclaim we have a bullish falling wedge into the moving averages. And then they'll reference what happened over here. Falling wedge into the 200 and 300 week moving average. And again, maybe that's possible if we get a larger bear market rally, but towards 97,900. But as I've said, we do get that rally. It's going to be very convincing that the bottom is in. Problem, as I talked about my last scenario with that bullish falling wedges, you dropped 68% here. Okay, this was a 52% drop, followed by a 68% drop. Here we've had a 52% drop. This is not a dropping down here to the high 40,000, 50,000, low 50,000 area. This is not a 68% drop. Markets for Bitcoin have been approximately 1 year or just over 1 year. Some of them right now are suggesting it will be shorter. You get that. But again, total 60,000 was the bottom. I keep telling you it's not the bottom. Now a few of them, and I'm starting to see it on the internet, social media, now some of them are proclaiming we're going down to the 200 and 300 week moving average. As I warned you before we ever reach this level, I was warning you back at the previous rally that we're going down to the 200 and 300 week moving average as we were dropping below the 50. Eventually, this is where we're headed. Now it's happening. Now the moon boys are coming out and saying exactly what I said. And as Bitcoin drops to new lows, you'll get more and more of them jumping on the bandwagon, repeating that scenario. Again, as I've said, the bear market's over here. The 200, the 300, 300's the red line. The black line is the 200. They've marked bottoms over here at the bear market. Bottom, let me just fix that, from 2017 and 18. Again, the 200 week, and then the pandemic sell-off, the 300 week. Our last bear market, first the 200 week, then the 300 week. These are the people that told us that we had a breakout at the top and that we and mocked and scoffed at the very idea that we'd have a sell-off. And now these geniuses are proclaiming, again, 80,000 is the bottom, 60,000 is the bottom, and now some of them are now starting to say, well, we're going to bottom down here, we'll get one more push, slapping themselves on the back, saying how intelligent they are. I told you this was going to happen. If the Moon Boys were a cryptocurrency, I would be a trillionaire, because I'm able to predict what they're going to say before they say it. Just like I told you, they were going to move their 200 and 250,000 forecasts into the future, into 2026. I was right about that, because I told you it wasn't going to happen in 2025. Now we're starting to see several charts like this with the 200 and the 300 week moving average, bottom, and well, here comes the bottom. The problem is that Bitcoin's bear markets have lasted a year, and they've dropped approximately 80 to 90%, dropping down to the mid 40,000 range. Well, that's only a 60% drop. Dropping down to 37,000, that's a 70% drop. Historically, Bitcoin has dropped, the last bear market, 78%. Markets have been approximately 80 to 90%. I wanted to point this out because we're now seeing the Moon Boys told us that we had a breakout at the top, that told us the sell-off was never going to happen, and scoffed and mocked at it. Now they're the geniuses going to tell us where the bottom is, which is what I told you they were going to do. I told you we're going to get another leg down to the 200 and 300 week moving average, and we could bounce there, as I've said. My original thesis was that. I've had a alternative thesis if we have already completed the bear market rally now, that, again, the bottom falls out of Bitcoin in a measured move pattern. I've talked about that at great length and detail. I'm seeing these charts, and there are several of them now on the internet, on social media. Most of the Moon Boys are still saying we bottomed at 60,000, but some of them are now posting stuff like this. We've started to sell off the 200 period moving average. I've talked about in my last update, again, you've got a couple of the Moon Boys saying that we're going to get that drop, and then we're going to bottom out right at this trend line, form the bullish falling wedge, as I showed you on the weekly chart. And I told you how, again, their charts are assuming we've already had this, that we've already had this 68% drop. That they're saying, oh, we're right here, and we're going to bottom out, we're going to get this drop, and then we're going to move into the new bull market. Well, that's not the way it happened before. Before, we dropped 52%. What did we just drop? 52%. We rallied into the 200. What did we just do? Rally into the 200. And then what happened? You dropped 68. You had a drop down here. You rallied up, and then you did it. And again, this dragged out for a year, and we got a 68% drop after rejection off of the 200 period moving average. I said in my last video, their bullish falling wedge is, misleading, and it's disingenuous. It's not intellectually honest in that they're saying, oh, we're right here. Well, this happened, this significant drop after rejection after the 200 of a 68% drop, or nearly that here, a bounce, and then dropping further to form the divergences on the weekly charts. So again, Moon Boy is doing what they always do. They're ignoring that we had this happen right after the rejection off of the 200 period moving average. Oh no, it's got to be the bottom right here. We'll get another push down, but it's going to bottom. Previously, is what Bitcoin did is it dropped 52%. That's what we just did. We rallied to the 200. That's what we just did. But we didn't make it to the 50% retracement. I told you this could be a more feeble bear market rally if this is it, and could see the bottom. This is, again, the other possibility I've been talking about. My original thesis is we drop down and get that rally back up, drop down here into the levels where the moon boys are expecting, but get that rally back up, go up here, test 97,000 or just above it at 100,000, and then have this be a prolonged bear market going on into 2027. If we get a measured move right here, again, we could see 4-year cycle complete right on schedule by September, October or so of 2026 if we get this measured move in this larger falling price channel. So what is an agreement with the last bear market is we dropped after getting rejection off the 200, we dropped 68%. That would take us down to 25,000. What's 25,000? Oh, that's an 80% drop on Bitcoin. I'm just warning you that, again, the boys are doing exactly what I said. Now that we're starting to see the rally fill, some of them are saying, oh, we're going to form a bullish falling wedge. Others are saying we're going to form a bullish falling wedge and we're going to hit the 200 and 300 week moving average. This is exactly what I told you they would say. And we know that the bear market has at least another 4.5 months and is likely to drop nearly 80 to 90%. Approximately, that's what it's dropped. The last bear market was 78%. Okay, we get a smaller bear market. Every bear market's getting smaller. Okay, well, say 70%. That's still 37,000. As I said, we're going to hit the 200 and 300 week moving average. Bitcoin has never confirmed a bear market without and gone and made new highs without first tagging the 200 week moving average. I told you we would go down to it. The moon boys would proclaim a bottom. It's more likely Bitcoin will get a longer market to at least September, October for the 4-year cycle, or a prolonged bear market if the 4-year cycle breaks. This is still a real possibility. Again, in the weekly time frame, we've moved right back up to the 50 level and gotten rejection here in the weekly time frame, getting an RSI 50 line failure swing. We've come up to it, and this is what we did back over here in the last bear market. First here, we hit it right here, and then here we overthrew it. But again, both of those marked counter trends and lower highs. We were consistently below 50 through the bear market, and again, below the 50-week moving average, the green line right here. Here we're still below the 50-week moving average right here. Now here in the weekly time frame, we still have a 50-50 sell signal. The RSI is still below 50. Price is still below the 50-week moving average, the green line that's dropping right here. This is bearish. You're in a confirmed bear market with 2 consecutive closes right here on November 23rd below the 50-week moving average. So again, Bitcoin's never gone and made new highs after confirming a bear market without first tagging the 200-week moving average. And again, I've talked about the 4 scenarios. One is that we get a higher low, tag it maybe, and then go higher and to the 50% retracement, going lower and then get it maybe, and faking out the moon boys and then in them. That was my original thesis, that we drop down and then get a bigger rally. Or again, the less likely one is that the rally continues here without dropping. That's less likely, I think. And then the 4th scenario is that the bear market rally is done. It's just more feeble than this bear market rally, and it was only just under 38%, and we're going to see the bottom fall out of Bitcoin like we did back over here. So those are the 4 possibilities. But again, this is warning you. Again, Bitcoin's in a confirmed bear market. One other thing about the daily chart is we broke this trend line. If we go all the way back to these lows, I have the trend line here from the higher low that set up that we broke with the rising wedge. But if you take it all the way back here and include the shadows, we're breaking and back testing that trend line, bouncing off the 50. So if we get more of a feeble rally, again, I'll be watching to see if we break the 50. If you get something bigger, then maybe you get above that trend line. Regardless, I believe the rally will fail. You've got these divergences that have played out. And again, the moment the MACD moves into the negative region, like we had over here, the moment the MACD moves into the negative region, you're going to get a much bigger sell-off. Over here, we moved into the negative region. And again, we've got a much bigger sell-off, 36%, 39%. So again, the moment the MACD starts moving into the negative region, we're going to really be in the middle. It will have already started getting a much, much bigger drop. Now, Bitcoin is currently up just under 1% right now, and I told you there's a good chance we're going to try to bounce up the 50-period moving average. We dropped by off the May 6th high. We've dropped 8.20%. I told you there's a good chance we're going to try to bounce here and get another lower high. That's now happening. The moon boys are, here comes the bottom, here we go. Again, we're probably going to set up another lower high after getting rejection at the 200. That's the black line you see right here. We got a peak and a lower high. Could get another lower high after that. We could see another lower high here. Eventually, we're going to make our way down to this lower boundary of the bear flag. We've broken down and back tested the rising wedge in the bear flag. That's outlined here in black. And we're bouncing off of the 50 period, as I warned you would likely be the case. Eventually, you're going to come down to the 100-period moving average towards the midpoint of the channel, towards the lower end of towards the lower end of the cloud here, and again, decisively break this or bounce off of it and then break it. But again, this is the lower boundary that needs to break of the bear flag. It needs to break in order for a bigger sell-off. Now, the rally here, it can be feeble or it can be a little bit bigger. Back after we had the January peak, we got a kind of a more feeble rally. And here we dropped just under the 50-period moving average. It got the rally. Here we're bouncing off the 50-period moving average, but you got kind of a feeble rally there, and then it was followed by another feeble rally, getting rejection both times at the 50. So eventually we're going to lose the 50, but right now we're trying to bounce off of it, which I told you we could bounce off of it. In my last update, I told you it was likely. Now, it could be a little bit bigger rally, or it could just be a feeble rally. We have crude oil dropping back below 100. We have yields falling after surging on, again, hopes of this Iran deal. It's not going to happen. Markets have priced in something that's not going to happen, at least not now. There has to be either more pain for Iran to either make a deal, or maybe the regime gets toppled once the U.S. combat operations resume. I expect a rally here, as I've said, but I think it will fail. Whether it's going to be feeble or bigger, that remains to be seen. So zooming in here, again, I'll be looking for a move eventually down into this area, this low 70,000 range, right around 71, 72, 73,000 or so. And then we'll see, do we break that level or try to bounce? We've got the divergence going on here. Indicators, MACD, again, once it moves into the negative region, Bitcoin's going to get a much bigger drop. Got these divergences, but again, stochastics become oversold and it's recycling back up. So we're going to get a bounce here at the 50, but it's likely not going to last. Got the divergence at the 200 period on the RSI and histogram, the rate of change, momentum. We've got it all over the place. These multiple point divergences or simple divergences. So again, giving us this 8.20% sell-off. We've had this losing streak going on for 5 days and down over 8% off the highs. So again, overdue for a bounce. See if it's feeble or something bigger. The cloud could hold as resistance. We now have the RSI below 50, but we're still above the 50. In order to get a bigger sell, we got to get a 50-50, what I call a 50-50 sell signal. That means where the RSI is below 50 and price drops below the 50-period moving average. When we had that happen over here, again, back after the January peak, we dropped below the 50 and we got feeble rallies to it. And then we saw that, nearly 39% drop. The RSI moved into the negative region and it remained there consistently. So here we've moved back into the negative region. And again, we'll see if we remained there or just pull up slightly above the 50 level and then turn down as something like what we had back over here, where we moved just slightly above 50, and then right there, just right before a bigger push down. But again, we're getting rejection off of the 200 period moving average. Horizontal resistance. I told you back over here on February 6th, 5th, and 6th, we were going to bottom either February 5th and 6th and rally up to the 74 to 80,000 area. That has happened. We've gone higher than I thought, moving above 80,000 into this next resistance area of these lows here, 80,000 and 84,000, and we reached 82,000. Similar to what over here when I told you we were going to rally. We'd rally but not move above 98,900. Here we didn't. Here we moved just above that resistance. Here we did not. We rally into the 100 period moving average. Here we've rallied into the 50 after breaking down and topping. We rallied into the 50 as the 100 was crossing below it. Here, and we did it a couple times, rallied into the 50, the green line. Here we rallied into the 100, and here we rallied into the 200 period moving average. With the 50, we got a significant sell-off. With the 100, we got a significant sell-off. With the 200, we're likely going to get a significant sell-off.